Welcome to Fearless and Unfiltered. Real talk, real challenges, and real wisdom from two badass BFFs that aren't afraid to say it like it is.
We're here to share stories that inspire, lessons that empower, and a whole lot of laughs along the way.
Get ready to get fearless
Get unfiltered.
and get real with Carrie and Vicky. All right, welcome into Fearless and Unfiltered. We are back with a packed episode. We are talking with some really great friends we brought along. If you guys are in the investment spirits, if you want to become a landlord, if you've ever wondered how that all happens, well, we brought the expert in with mortgages. So, Carrie, introduce our friend that we brought along today.
Oh my gosh, I'm so happy and grateful to introduce Christi Mae. Christi Mae is a lifelong entrepreneur and seasoned mortgage broker with nearly a decade of experience and over 30 rental properties under her belt. From salons and spas to construction and real estate investing, she's built businesses from the ground up and now specializes in helping clients leverage creative financing options to grow their portfolios. Christi is passionate about uncovering the lesser-known loan products that make real estate investing more accessible, especially for self-employed buyers, first-timers, and this opens up a lot of opportunities for seasoned investors. So welcome, Christi Mae, to the Fearless and Unfiltered podcast.
Thank you. Thank you. I'm so excited you guys thought of me thinking about professionals. I'm really excited to be here.
Absolutely. And I got to tell you, I've known Christi Mae for a few years now, and this woman is amazing. What I love the most about her is she can explain a topic and make it very easy to understand. And she goes the extra mile for her clients. So we are grateful to have you on today to talk to us about DSCR Loans.
Good job.
It's a lot. So what is a DSCR loan, Christi Mae?
So to start with, a DSCR loan, plain and simple terms, is a debt service coverage ratio. And to break that down, so to start with, it's a loan that is specifically designed for investment properties. You cannot use this for your primary residence. But a lot of people would love to dive into the real estate, and they're just worried about maybe your debt to income, maybe you're self-employed and you've taken a lot of write-offs on your taxes. And it doesn't look at your personal financial situation. It looks at the property as a business, and can the rents coming in cover the mortgage payment, the mortgage principal and interest, taxes and insurance? Can it cover that? And are you credit worthy? And so it looks at those two things and decides from there if you can buy a business or if you can buy that property as a business.
Okay.
So that's what it, go ahead.
That was my question. So does it just mean that it has to be commercial property that you can use this loan for? Or let's say I own my own home, but now I want to maybe get into Airbnbs and buy an investment property.
Yes.
Ooh, I like that answer.
So it's done mostly, well, it is for commercial real estate, but it's really about residential commercial real estate. So rental properties, all of that. Now you can do commercial, absolutely, but I have much more experience in the rental market, people wanting to buy rental properties.
Like multifamily homes, right?
Yes. And let's say you could even take your personal rental property and you could be like, well, I want to move to the beach and I'd like to Airbnb my own house. If you took money out of your house, you could take a DSCR loan out on your house and buy your place at the beach, right? So you can actually turn your primary residence into a rental property and take a loan out based on that.
Now, is this a new type of loan? Has it been around for a while? And why was it created?
So that's really interesting. So I went down a rabbit hole with this. It's only been around since 2019.
Okay.
And, loans don't just pop up and then they're available everywhere for everyone. A few lenders start doing it, and it takes a long time to build up steam. And what I've realized, not only there's a lot of lenders that do it now, but there are not a lot of mortgage brokers who understand what it is and how valuable of a resource it is for their clients. So it just takes a long time to get products out there. I would really say around 22, 23 is when they started becoming a buzzword. But I am shocked how often every day I talk to real estate agents and investors who have no idea what I'm talking about.
Right.
So it really opens up the doors that way. So
Go ahead.
So let's say I'm a real estate investor and I want to buy a duplex or a triplex or a fourplex or something. And I don't know where to start. What do I do? Do I just call Christi Mae and say, hey, this is what I want? Like, what's the process to get started?
So basically, if you wanted to be, you can be a first-time investor. And the way they're going to look at the loan product that's offered to you is a lot of factors are going to come into place. Are you closing in an LLC? Are you an experienced investor? That will go a long way. You'll get a better rate. You'll have better lenders, or not better lenders, but just different loan products available to you. If you've had 1, 2, 5, 10, how long you intend to hold the loan, all of those kinds of things. So let's just say we had a first-time investor. From a first-time investor, they're going to, if you're wanting to purchase, you're going to need to put down 25%. But you are on a conventional loan as well.
Okay.
And a conventional loan can be a lot more headache, a lot more work, and you just might not qualify, right? Mostly you just won't qualify. Second, it's just a lot more work. It's a lot more paperwork. It's a lot of moving parts and pieces and all of that. So for the first-time investor, the big thing to know is you're going to need 25% down. Now, if you're an experienced investor and you've got 1 or 2 properties under your belt, I've got lenders that will do them for up to 10% down.
Okay.
You're going to pay a higher interest rate, right? It's all based the same way your mortgage is. The more you put down, the better your rate's going to be. Your risk assessment goes into that, so the better your credit. Somebody with 800 might only need to put 15% down is the same. So same principles as a basic mortgage, but the experience does matter, and all of that kind of goes into it. So that first one I would kind of say, and then we'd start to look at, does it rent flow? And we can talk about that because that's a different type of appraisal. Like, let's say it's a property that's not rented currently, all of those types of things, there's options to buy as well.
Yeah, that was what my question is because you were talking about it with this DSCR loan. It basically looks at the cash flow of that property you're wanting to buy. And is there already something there? What happens if it's a property that doesn't have that right now? Is it still eligible for that kind of a loan?
100%.
Okay.
So it's a type of appraisal that gets done. So it's a rental appraisal, and you can look at 2 types of rental appraisals. You can look at a short-term and a long-term rental appraisal, depending on how you're going to use that property. So that's how they would assess something that isn't already leased. So there is a lot of opportunity to get in there and get something that you think might, that is going to generate, maybe all units aren't leased, things like that. So absolutely.
How do you find information about that? Let's say I'm strolling down Carrie's neighborhood and down the 3rd Street, there's a property that looks like a duplex. It doesn't look like anybody's in there, but I want to know, has it rented before, or who has this? How do you find that information out?
It is a little tricky to find information out. You can go on Zillow. Sometimes there is like rental history stuff on there. Sometimes for me as a broker, I can kind of find those things out because there's things we have access to and stuff like that. That's hard information because it's private information. It doesn't have to be listed. That's where you really have to start to do some digging and stuff and find out. Most people, I would say, when they're looking, they kind of have an idea of what rents are in that area and what they could turn out. They kind of are already been tipping their toe in there. Sometimes you open doors to them about like, oh, this is a great area too, but they have an idea of what they're looking for in rent values in that area.
Okay.
In general.
Which right now is pretty crazy.
Absolutely.
I just read an article that in a lot of cities, it's more expensive to rent than it is to actually go buy a house right now. So
It is.
Crazy.
just the makeup of the cities, I guess, that you're in. So, this seems like a fairly newer type of loan. But here's my question. I am not an experienced investor. I want to do this for the first time. So is there any more requirements that I'm going to have than a seasoned investor other than the extra money down or the good credit?
That's a good question. So assets you're going to want some reserves in there, probably 6 months, depending on the size of the project, depending on a lot of things. 6 to 9 months worth of full reserves they could ask of somebody who's not an experienced investor. If you're wanting to close in an LLC, you'll want to really work with somebody experienced and really make sure they're going to find the right lender for you, so that it's not one of those things like you want to be putting in a purchase offer and then figuring out all the details.
Sure.
You really want to find, because it's so specific. It doesn't just they don't just fall into a category, because there's somebody who you can find someone and the requirements can vary a lot. You might find someone that only requires 3 months worth of reserves, I've seen up to 18 months worth of reserves.
Wow. Okay.
Depending on the credit profile, how much they're going to put down. Another thing they look at to just kind of explain really quickly how the rate works. Like, let's say the rental value is, you're going to get $2,000 a month for rent, and the mortgage payment is $2,000 a month. That's considered like a 1-1 ratio. You can have the loan. And your interest rate, and then let's say your rate might be 7%. Well, all of a sudden, let's say you get an appraisal back and the rents come back at $1,500 a month or $2,500 a month, and you're getting $2,000, and your mortgage payment is $2,000. Then you're going to have a better rate, right? There's less risk because you're getting more rent
than what you are being paid, what you're paying for their property, basically.
Exactly. And there's even lenders who will lend if you're only getting $1,500 rent and the payment was $2,000. You're going to pay a lot more in interest, right? Your interest rate is going to go up. So it's all risk. Same as
that does seem risky, though. So let's say you're only making, it's an investment for you. So your optimal goal is, okay, I'm in a different type of neighborhood that maybe might increase in value in several years, and that's what you're banking on.
Yes.
But if it's not immediately when you kind of start the game, then, there's still opportunities for you under this type of loan.
There is.
Okay.
And this appeals hugely to the fact that right now it is hard, because investors are smart and they know that right now your rents you're not cash flowing from a lot of your real estate. Like, if you're just a smaller investor, do not look at it as a cash flow business. It is not a cash flow. A couple $100 a month, or right. I don't care, $500-$600 a month. A new refrigerator is like $1,800, right? So one thing goes wrong. Like, it's not about cash flow for the smaller investor. They really need to be prepared for they're building equity,
right?
They're building equity, and that's what it is. Maybe if you
for the property to appreciate, right? That's
exactly
really the long term of why people get into investment.
Yes, and a lot of bigger real estate investors that can afford that lower cash flow, right? Their experience, they know, first of all, as soon as those rates drop, they're going to refinance the loan. It's right now. It's like, again, like if you've got the money right now, it's a great time to buy, right? Because you can get out of that loan, right? Like, so they can afford those payments short term. There's the option to go interest only. In the beginning of the loan, you're mostly paying interest anyhow. Investors want to keep their cash free, right? So they don't care about that stuff. They want to keep their cash free. They know they're going to refinance something at this rate anyhow, right? It's different. Maybe not in a great interest market. Maybe if rates were at 5%, maybe then you aren't going to just do interest only. But for right now, they want to keep that cash out. They're going to refinance these loans anyhow. So there's a lot of options in there. So they have the room to know it's not. And some people really need that extra $600,000, $1,000 a month. It's still just $12,000 a year. That's not a lot of room for something to go wrong. It's not like, and it's not passive income. That's the other thing I always say. Like, again, you're going to work for that. Right. All of it, big or small. I don't care if you're a big time investor or a small one. You are going to work for that money. It's great. It's a great investment, great equity.
Okay,
it's not passive.
So this particular loan program is designed for people that were living in the property. It is not for like a strip mall, so to say.
Yes, they could buy the whole strip mall.
Okay.
Whole strip mall, yes.
I had an old boss that did exactly that, because he put his business in one of the units and then rented out the rest of it, which pretty much paid for his lot anyway, but he owned the property as well.
Yes, and my brother's a commercial real estate agent, and his company specifically does that. People want a business, and then they're like, but why don't you just buy the strip mall? Why don't we develop the mall? And then you have tenants, and then you have income. Right. So that is a bigger. So yes, and DSCR loans can go up to 25, 50 million. I mean,
Oh, okay.
you can go 100% commercial, and it's the same kind of process. Way different underwriting, right? Like you've got like all the commercial stuff that goes on with it and stuff like that, but it's the same process for commercial investments and stuff like that. So.
Well, I know just some people in the world that we are in right now, it seems like mortgages are such a, I don't want to call it a volatile market, but it's such an up and down. And how do you know when is the right time to jump in? When is it not the right time to jump in? Is that really just a conversation that someone needs to have with a Christi Mae in their life? Or, how do you decide that when is that time?
That's my favorite question. I think it's in one of my other books I read to talk about. Because my big thing I say to people is just talk to me, right? Or talk to somebody you trust, because there's too much noise and we're just, fight, flight, or frozen, and everybody's frozen. And people take old, antiquated information. That could be something you heard last week or something you heard from your great-grandparents that got passed down from your parents, and then a little bit of what you heard on TV, and then a little bit of what a colleague said. And then you have decided with all of your intelligence what's really going down. I'm in the industry and I barely know, and I pay a lot of attention. So see if it's right for you. That is the big thing. You're not going to have the same insurance policy as your neighbor. It's not theirs. It's not your sister's. Is it the right time? She's not buying real estate. She doesn't want to. So don't listen. Just find out if it's the right time for you, and if it's not, when, or maybe never. But let's talk through all the things. Don't assume it's passive income. Maybe I'm going to talk you out of it, right? But have the conversation and all of that around that. That's right. And cut out the noise. Just cut it out.
Cut out the noise, ladies and gentlemen.
So it's on the first-time home buyer, all right? And I'm coming to you and I'm like, Christi Mae, my husband and I, we want to buy this house. What are you going to ask us? What are you going to tell us?
And are you talking about a first-time home buyer investment?
Nope.
First-time home buyer.
This is my first time purchasing a home.
So what are my first questions going to be? I wasn't quite ready to switch there.
Sorry.
No, you kind of, sorry there. So my first-time home buyer, I really start to talk to them like, what type of research? I'm going to ask you what research you've done on your own. And then from there, find out if so, like, what do you think you want? If you're making this call to me, it means you are thinking about it. So when you're driving around looking and seeing things, what do you see that you like? What's appealing to you? Is it a condo? Is it a single family? What type of price range are those in?
Right. So let's just say I am interested in a 3-bedroom home that's around $400,000 to $500,000.
So then I'm going to start to ask, and again, somewhere maybe even before that, somewhere in those first 4 questions, I'm going to ask you what type of payment you're comfortable with, or you think you're comfortable with, right?
Okay.
So then we're going to start, then I would get that information, like that would be exactly where that go, that 500,000. So then let's start to break down what that looks like, and what's solid and what's variable in there. So that's then we start to unwind, like, does this fit what you were thinking? Does this fit the payment? If it does or doesn't, sometimes people are like, oh, well, I could afford that, right? Like when they start to think about it, they just don't have any clue. Like they're like, well, I'm paying $1,500, maybe $1,700. Well, maybe it's going to be $2,200, but then they realize, no, I really can't. We'll look at whether they qualify, all that, and if it makes sense for them. But then they're like, oh, yeah, we really could, and we love this. So what they start with in their thinking just gives me an idea. And then we kind of break it down into, okay, that's what that really looks like. Or we might say, let's look at something at $350,000.
Right.
Right.
So are there specific products available for first-time home buyers? Are there, what's new out there on the kind of available?
There's a lot of products out there, and there's always something new and available. And so I think they switch a lot. So what's available today might not be available tomorrow, but there is a lot out there. There's down payment assistance for first-time home buyers, FHA, conventional. There's USDA loans that you can get in with 0% down. But one thing I do like to make very clear about down payment assistance programs, I've yet to see one. They're for profit. We like to use assistance as like we're giving you something free. It triggers something in our head as this is assisting me. It's assisting you in getting in the home is what it's assisting you in.
Okay.
It's not assisting you in giving you free money. Maybe if you live in the house for 10 years and never refinance, you might get that money for free, possibly, right? And maybe, but they're not good or bad. You just want to know individually, does this make sense for you short and long term? Because people will do it just to get someone in the house, not realizing like they're not going to be able to refinance when rates go down. So there's a lot to think about down payment assistance. It's great. I do a ton of down payment assistance programs. But just really explaining to the client what they're getting into and breaking that down. Like you said, I'm good at breaking things down in simple terms. And it's complicated to understand. And I am really good at walking my clients. I do a lot where I think this makes a lot of sense for you. I've got one that's 0% down, 0 interest, right? If they
0% down, 0 interest?
If they refinance, they have to pay it back. If they refinance in 10 years, but you can still hold your money for the next 10 years. It's 0% money. You might as well stick your money that you borrowed from them that you were going to pay anyhow in an account, knowing you're going to have to pay that if you refinance within 10 years. Or maybe by the time you refinance, you've got the equity in your house and you paid out of that.
Right.
It'll still get you in the house. You just want to know what you're getting into because you don't want to refinance in 2 and find out, oh my God, I have $88,000 and now I can't drop my mortgage payment.
Right.
And
It's just creative ways of moving money.
it's just creative ways of, it's literally
What
like,
bucket do you want to put it into? And when?
And when exactly do you want to build the equity? So just knowing what you're getting into. So the down payment assistance is there, but really know what you're getting into and make sure you have a mortgage person that's not like, here, this is just for you. Make sure you understand why, and it really is for you short and long term. Right.
So should people who are looking to work with a lender, should they speak to a couple different ones? Like, what is the rule of thumb? Like,
I always say, even to my clients, like, I mean, you're not doing your due diligence probably if you don't speak to at least 2.
at least 2.
You want to, just like your real estate agent,
Mm-hmm.
this is someone is going to see all your stuff. They're going to make money off of you. They're going to see all of your personal information. They're going to help you through a really stressful time.
Yeah.
And you want to enjoy the experience and feel that you trust them to help you through this process. And they should also have a really, in my opinion, a very good working relationship with the real estate agent to take a lot of the burden off your back so that you do not have to be the go-between person again, we're both as real estate agents and lenders, we're being paid to do this service. They should not be the middle communicator.
Absolutely.
So I think you should feel you have a very trusted team so that you can enjoy the stressful process as much as possible. That's
right.
She did say creative accounting or whatever, creative finance.
financing.
I love that name. Okay, so I'm going to go back a little bit, and I want to learn a little bit more about Christi Mae.
Yep.
Okay. So you do seem like you have a ton of knowledge in this. And
I do.
where we're located here in Charlotte, North Carolina, we're like literally right on the border of South Carolina. So what happens if I want to buy a home in South Carolina, but you're my buddy, Christi Mae? Am I able to go through with you? And do you have to find out what states your people are, I guess, licensed in?
You do want to find out what states your people are licensed in. So I'm licensed in North and South Carolina, but even for me, like if I tell my clients, and it happens a lot, I refer a lot, but I still want them. And in our industry, we don't get any type of referral comp or anything, but I still try and move my clients to someone that I feel is going to be happy. They're going to be happy with the type of service they're going to get. So there is a tight network. I have a lot of resources. I think your broker should try and find you someone that is going to help you out. And every client's different in the type of way they want communication, as we all know, right? Mm-hmm. Like, so find somebody that matches with that person and is going to help you out. DSCR loans, I will tell you, I can do DSCR loans in like 40 states.
Okay.
It's a business purpose loan, technically.
Okay.
And you need to be a licensed loan officer, but you do not need to be licensed, nor does your company need to be licensed in that state to do the loan.
I was going to ask you that because, like, say I want to buy something in Florida, that was one of your 5 states you wanted to move to. It's stocks and investment properties.
Yeah,
exactly. So you could still do that loan for us even though you're residing here. Okay, that's awesome. And you said there's different you could have options on the table. So what your job for as my mortgage broker is going to figure out what tools or what pockets or buckets are out there, and then you're going to let me know what your choices are.
Yes.
Okay.
That's exactly what I tell clients, whether it's an investor or whether it's a first-time home buyer. I kind of get a good picture. We do some back and forth. And then I take the application and then I find out what products with what lenders work best for them. Because what I say to them is, at this point, I could just overwhelm you. There is millions of products,
Sure.
millions of lenders. And let's narrow down to a few that work for you, and then we can discuss the details of those. So I kind of really cut myself off. I'm wordy. And so I've learned to be like, I'm just going to overwhelm someone. I can feel them like shut down. And so yeah, I have learned to just kind of say, okay, I have my information. Now I know what I need to look for to match you with the right lender, the right product, and let me get back to you and we'll talk about products that relate to you specifically. So I give them an overview of the process, but then I tell them I'll get back with products that relate to them specifically, and we can find out together what works for them. Because I always say, like, you don't need to be a broker, or you don't need to be able to go sell it, but you should understand what you're buying, right? Like, you don't need to know how to fix your new car, but you bought that car for a reason. You should know why you bought your new Audi, right? Like, I bought that. I selected it because of customer reviews, because just some basic things. You put me in this loan because I'm going to get my credit up and we're going to do this, like some basics.
Right.
So, so really leading them through that process, and I can talk in more detail once and break it down.
How did you get into the mortgage industry? Because you did say you have lots of rental properties. So I want to find out how you got into that too. And when was the Christi Mae moment of saying, I'm going to go do that? But how did you get into the mortgage industry?
Okay. So this will be great because this will tell this is a great investor property story.
Okay.
So I bought my first house for $70,000. And then I opened up my big, huge salon and spa, and I had that for about 15 years. But so I'm going to go back. So I bought that house. That we got some equity in that house pretty quickly. I took money out of that to open up my big spa, and I had an apartment in that house. And once the spa got going, we decided to move out of that house and move into something bigger, but hold that house. And we moved people in downstairs, and again, another 4 years later, had more equity in that house. Bought another rental property. So we bought a beautiful home with 15 acres and, 3,000 square feet with the equity in that little tiny house. So I bought a spa that employs like 30 people, bought my primary residence.
So smart.
Then took equity out of my primary residence, bought my first rental property, and then just kept flipping those I held on to the rental properties, but I kept taking equity out of those.
Okay.
But then it kind of went from a jump. Like, I had 3 and then I had 30.
Wow.
Like, we closed in like 2 days on all of those. And it was my ex-husband who was the property manager, maintenance. Some of them needed major remodeling and gutting. And it was me that managed it. Yeah.
Wow.
It was fun.
Good job.
Right. So that's what I tell people, like, from that tiny this is something else I tell first-time home buyers. I know you want to be emotionally attached to this house. They're the biggest dreamers. They more so than your second-time home buyers. They realize at this point it's a home. It's an asset. Those first-time home buyers, they got to love every detail. They want to get very attached. They want things out of their means. I'm like, I know you want to love it, but here we are. It's literally you're a real estate investor the minute you buy your first property. If you thought about it that way, you can take a little bit. This is just my first property. Whether I buy, what doesn't mean I want to be a real estate investor. It might mean I just want to sell this and buy my next primary residence.
Right.
But if you own real estate, you're a real estate investor, and you have a asset that is available to you to work however you want, and that makes you and it kind of takes it. They're like, oh, well, just get the house, right? Like, just get something that you want to love it and you want to like it, but it's not going to be your dream home most likely, unless you won the lottery, and then you don't need my loan.
When I first bought my house, I sold it and made $50,000 from it. I mean, I was like, holy crap. Yeah, I was younger, first time home buyer, right? So after I bought my house, I owned it 5 years, sold it, made 50 grand. And so I used that as my down payment for my next house, which was a bigger, more expensive home. But you build equity in home ownership. And so many people renting, you're just throwing money down the drain. Like, allow your money to work for you. Work smarter, not harder.
Like, you have to sell that first house for it to go ding.
Ding.
Like, the first time I got that equity out, I was like, what? I can buy a boat. I can open a bit. Like, what? I can do whatever I want with this money. Like, I did not know that. And so it's a hard concept to get them to really fully. But that second time homeowner, they're like, I love the house. It's great. Let's buy it.
Let's
you know,
go.
because they know it's going to, you can sell it. They're going to make some money. It's going to do all the things. So it's different.
Before we wrap up, tell us about the market. So we probably should have started with it. Give us kind of an overview of the market from your perspective.
So it's an interest. It is like fight, flight, or frozen. It is a frozen market for sure. I mean, houses are sitting for a while, longer than I've seen them sit in Charlotte. I do a lot of work in Columbia as well. I see houses sit there, and so you're seeing a lot of sitting on both ends, though. So you're seeing some more seller concessions because people are ready to move. I do think the realization, and here's my opinion, not my opinion, but here's what I hear every day, and really what I think. Rates, and what I tell anyone I'm doing a loan with right now, you're going to be in this loan for a couple years, 18 months to 2 years minimum. Just don't think about refinancing. We can think about buying another rate. We do all, but it's not we're not doing this in 6 months. Like, and if they do, great, but let's not plan for that. I don't see any way that market. So you are seeing some loosening of that. And I was just reaching out to someone before I came here, and there is this slight, I feel, a little bit more of a buyer's market going on right now.
Yeah.
Right? Like, we've got some room for some seller concessions. They got to move the house. You don't want to give away a lot, but it is helping, especially if we can get those seller concessions and buy down the rate for the buyer who's skeptical because of the rate. Like, it really can it's a great time to buy a house because they can give a little on that, and there's still room for equity to build in the house. I think it's a great time to buy a house for you if it's the right time, right? Like, cut out the noise. That's such a blanket statement to me.
Yeah. So
Well,
true.
I just want to say this in case you're watching this in 2029. This was actually 2025, right? That we're talking about this. But I do want to kind of go back to the market, though, because I literally just heard on the news today that even in Greenville, they were talking about how there's like 500,000 homes on the market versus what is out there to buy. And so my question is, you said it's a buyer's market, but then in that sense, what should we be looking for? Where are those deals that we're talking about? And is the market going to fluctuate itself since the craziness of COVID? You know, it seemed like a lot of the house prices went extremely up in value, lots of equity in their houses. So is that trend going to continue?
I think
In your opinion?
in my opinion, I think it's a little hard, because Charlotte can be a little bit of a bubble, right? Like, it's depending on who you're talking to, but really when you focus on Charlotte, I do see some capping of stuff going on in the like more dense areas of Charlotte, but it's just moving out. I mean, Ballantyne Market, those places are there's just still a ton of room for a ton of equity still to build in all of those areas, and I don't see a slowdown coming to
I don't
either.
either.
I mean, I can't imagine we're just not going to merge to Raleigh and all be one.
It's all going to be
giant
one huge
fiesta,
corridor. Oh, it will be.
like,
And Columbia. I see it all
of
happening.
it. I know, it is crazy.
Someone told me that when you go to a major city and you see cranes up on the buildings, that is a sign that that community or that city is doing amazing because they're growing, they're building. And it really starts with the commercial end of it. So
Really,
when you're doing your traveling this summer or winter and you see big cranes in big cities, that's obviously a good sign of it.
Yeah, so I get lost in some of that, and then I do, when I'm traveling, I'm very aware of what's going on, and I think every area just has a very different market and how quickly things are going to build equity. Don't just jump into a house and think 5 years you're going to have like 300,000. That's not
Right.
Yeah, that's not the same. Maybe up in Cheryl's, like not even in this area, but like each area of the country, like every city, every town is so different. And stuff
Absolutely.
like that.
So I think the key to all of this, folks, why we brought our friend Christi Mae in is because she is the expert guru when it comes to mortgages. She can put it in layman's terms for you. She is a friend in the market. And I think I really like the fact that, yes, you could overwhelm yourself trying to do a deep dive and rabbit hole with this, but why not go to the expert, kind of give her your qualifications or what your wants are, and then you could really kind of Silence the noise of it all.
Very good at honing it in, roaring it in. Let's get clear about your goals,
Let's get
right?
clear about it.
That's what I can
Clarity is power.
We do want to know in the comments, though, what are you stressing out about? What questions do you want answered? Trust me, we'll send it over to Christi. She's smashed that subscribe button. So we'll make sure that we get you some of those answers to those questions. But I know it's one of those subjects that it either tenses you up or it fires you up. And either way, it's time to get some more information and life nuggets on it. And we get the experts in here.
So, Christi, if anybody wants to find you, where can they find you?
So you can definitely reach me at Christi Mae, ChristiMae, mortgage @gmail.com. That's definitely the best way to get a hold of me. You can definitely find me on social media.
And we'll leave all of her links in the show notes.
I'm always available on social media, but yeah, definitely email. Either one of those is a great way to get a hold of me. Any questions, anytime.
Wonderful.
I think she might have to become a recurring guest here, though, because
say
She has a lot. We can talk about pauses or all kinds of stuff. Well, thank you so much, Christi Mae, for being a guest. We appreciate
I really enjoyed chatting with both of
all
you. This was great.
the knowledge nuggets.
Yay.
All right, smash that subscribe button. You're listening to Fearless and Unfiltered. We'll see you on the next round.
Thanks for hanging out with us on Fearless and Unfiltered. If you laughed, learned, or loved it, smash that subscribe button. Share this episode with a friend and be sure to join us for the next real, raw, and fearless conversation.
Remember, life's too short to play small, so stay fearless, stay unfiltered, and keep showing up with your badass self.